Hi, this is Kirk with Forex Strategies and Secrets. Well, this webinar is going to be about part 3 of becoming a consistent trader. And this is in our series on consistent trader, becoming a consistent trader. So we're going to be talking about never turn a winning trade into a losing trade. Now, I see this happen so much that it's really important. I've heard other people talk about the same issue, that people get into a trade and they figure every trade is going to go for 100 pips, and they get up 5, 10, 15, 20, 30 pips and then take a loss on the trade. And so we want to talk about that in this webinar. Now, you're going to have some losses, but you need to keep your losses to a small level. How large does a winning trade need to be before you start protecting profit? Okay, that's an interesting topic. So we're going to give you some parameters on that. Now, this depends on you and your trading style. Now, but keep in mind, the object of trading is to make and protect capital. When do you move your stop to protect profit point? When you protect, I usually like to protect 1 or 2. I don't like to set it a break even because then the spread is going to get you. But take it to 1 or 2 pips when you do, and that's protecting profit so that it will not go back and you won't lose on the trade. So here's some different areas. Different people like to use different methods. Does your profit need to be 5 pips before you move it to 1 pip? 10, 15, 20, 7, 8, anything that meets your criteria. What do you have to have before you're going to move it to a protect profit level, the 1 and 2 pips? Now that's up to you. You decide. But you need to decide, then do the same thing on every trade. So if you decide it's going to be 8, 12, then that's what you do. You set it, and as soon as it hits 10 or 12 pips, or whatever you've set, then you move it to 1 or 2 pips to protect profit. So we suggest that you have a long-term trading style and a short-term trading style. So maybe on the short-term trading style, you are trading like the 15, 5, and 1, and you have it set so that it might be, as soon as it hits the 10 pips or 8 pips, you move it to a break even. Your longer term trading style, you might say, well, when it gets to 15 pips, then I'm going to move it to a break even. So that's for up to you to decide what you want to do there. With each style, you may choose a different profit point to bring your stop to the area where it's protecting 1 or 2 pips. The object is to protect capital. There's no use going positive and then go back and have a loss. I've seen people take time after time after time. This fellow was telling me that he never makes any money. I looked at his account and saw all his trades, and he had 30 to 50 trades. It was just a whole bunch of trades, and every one of them went 20 to 30 pips profit. And he turned around and he took a 20, 30 pip loss. When he said his take profit and his stop losses, it never hit his take profit, but it always come back and hit his stop loss. He didn't manage it. He didn't close the trade. He just set it and walked away, I guess. You can't do that. We suggest you don't walk away from a trade until you're protecting some capital. If you close a trade, you can always get back into the trade, and if it continues in your direction. So if it goes 5, 10 pips your direction, and what if you have not even set your protect profit and it's coming back? Many times I'll close it at 1, 2 pips, or maybe a negative 1, 2 pips. I don't ever let it, if it's gone positive and comes back, I don't want to go back and take the loss because it's going to do 1 or 2 things: continue in the direction it was going or go in the opposite direction. And so when it goes in the opposite direction, then you can get back in trading in that direction, but you haven't taken a big loss, and hopefully you've at least broken even on the trade or made a small profit. So let's go to some charts and look at some of the things I've been talking about. And what I picked this example because there's a lot of things going on here that I see so many people do. Let's start out over here. Now notice this pattern. That's part of what we use as far as our trading and knowing which direction the trade is going. Well, when the price is on the one side of all 3 moving averages, well, that's a heads up. Maybe you take a trade right there. So I'm going to put a vertical line where there is a good exit entry signal. When you see all 3 of these indicators at the bottom all the same color and on the same side and on the same side of the lines, that's potential entry signal. Does that mean that everyone's going to be 100%? Well, look at the pattern right here. We'll move along and show you what a better pattern looks like. But if you're taking a trade right here, that's about where people are going to get in. This one didn't go very far in your direction. Whether that met your criteria or not, why take a loss on that trade? There are exit signals already on that trade. There's an exit signal right there, a good one. And there's another one right there. So that one would have either broken even or a small loss. But from here, why go up? And many people say, oh, it's 10 pips, and they close it. Then it turns and goes down. And so then they get in down here, and it goes back against them again, 10, 12 pips, and they close it again. So let's show you right where there is a good pattern and a good entry signal. Right there's a great entry signal. On all the other time frames, I checked this out before, everything said that was a good signal. But look at that pattern. When you see, in my case, the silver, green, and turquoise. If it were going the other way, silver, green, and turquoise going long, then that would be a long trend. So this is a good trend. So this is really going to be a good trade for you. So that's not necessarily going to go back against you and lose any money on that one. Even if it does go back here and you didn't, and you closed it, you still made profit on that trade. And there's other videos we have that talk about managing trades. But here's where I see people taking trades. That's okay to take a trade at this location I'm going to mark, but you got to be careful and protect the profit. You can't expect that trade to be going a long ways in your direction. There's a good entry signal right there. Notice everything's on the correct side, correct color. The pattern's wide open. It's done a retracement. It's taking off. Well, here's the caution. They don't go forever. It went down for quite a ways, and then it went sideways and trickled down a little bit more. It's going to come back. So if you're taking a trade right in there, it went eight or nine pips in your direction and started coming back. If you watch the exit signals in the 15.5.1 basic course, there are exit signals starting to appear right here. So this, you should have at least broken even on this. You shouldn't have lost on that trade. If it's going to go in your direction, you can always get back in. This case, it just went sideways and kept on going the other direction. So that's what I wanted to share with you right there is when you take the trades fresh and it goes a little bit, get out. You can always get back in. Right here, get out. You can always get back in going in the long direction. So that's what you have to be aware of. Decide how much you're going to protect, when you're going to protect it, and always make a little bit so that you can have be able to come back and trade some more at another time. So over the next few weeks, and we've already done a few of these webinars, we'll be going over more of what you find in the Money Train trading course. Now we have tried to think of everything that successful traders do to manage their trading account and then how to manage their career as well. This point of never turning a winning trade into a losing trade is only one of many concepts a trader needs to know to be a consistent trader. So watch all this whole series because there's a lot of information. So we've tried to make the course simple, easy to follow, quick to learn, with access to others to get your questions answered, and so you won't be alone in your trading. Now, what are the tools that we use? We use a scanner and we use an automated stop. The automated stop will be available in the near future. It's not available right yet. So what is the automated stop? Well, it trails your trade with customized settings, and I'll show you some of those. It closes trades based on indicator changes. It allows you to take and manage more trades at a time. So now I'm going to go back to the charts and show you what the stop would look like. So I'm going to go up to this window and click Tile Windows. I want to get all my time frames here. There's a 1 minute, the 5, there's a 1 hour time frame, and then this is the 15-minute time frame. I'm going to point out a couple of exit signals, and how you can use the tool that will actually exit trades based on that information. Okay, you can set it for whatever time frame you want. If you want to manage on the 1 minute, it'll do that. If you want to manage it on the 15, it'll do that, or the 1 hour. Any time frame you want, you can change it, and you can change it on the fly. So you start out managing on the 1 minute, it looks like it's going to go pretty good. You move it to the 5 minute, it's still going. You move it to 15, and then you move it to the hour, walk away, and go do something else. Come back. What if that 1 hour still hasn't closed you out of the trade yet? Then you can start going back the other way. Any way you want, you can change time frames. Here are some exit signals that it has the capability and that you can choose from. Let's just say we're using the 5 minute as exit signals. One of the exit signals would be if you've taken a trade right here, going short. An exit signal could be, this is the male and the filter. When the male filter changes colors, then that would close your trade. So you don't have to decide, it will do it for you. But if you take a trade right there, then you are going to suffer a loss, but it won't be a big loss. You get back in the trade over here. That's a good place to enter a trade, and it's going long. Another exit signal would be when this indicator changes colors. So right here, it gave you 20 some odd pips. Now we're going to take that same area and look at the 15 minute. See right there, that's this last little area is where we've been talking about in this little section. So right there, there would be an entry spot on the 15 and the 5, and the 1 also says that's a good place to enter a trade. Now, what if we'd managed this on the 15 minute instead of the 5? So we know it's this area right in here. The 5 minute would have taken us out there if we had chosen this indicator to change colors. And then if you'd gotten back in, it would have exited the trade again. But if you'd managed on the 15 minute, the trade we would have gotten in right up in here. So right up in here is where we would have gotten in, and this would have given us about between 30 and 35 pips before that changed colors and took us out of the trade. There's this other indicator right here. It's called the male. You can say, okay, it's in the trade. I'm going to have it close the trade when that male crosses back above the 0 line. And so it would have traded through this area as well. So there's a couple of different ways you can have set the stop to manage trades, and you can change it on the fly. So that's the power of a tool. Now, we've just been talking about while you're sitting in front of the computer. This just happens to be a great example. That's why I chose this currency pair, because all the time frames had all the examples that I wanted to share. What if you had taken a trade on this 1 hour? There's a 4-bar on the 1 hour right there. So even down here, there's a 4-bar. The 15 minutes is going to be set up also. But you take a trade, even if you took the trade right here, and then had it manage when it changed colors. And you're not even there. 190 pips, between 190 and 200 pips, and you're not even there. This happened, for me, it had been about midnight my time, so I may not have seen this trade. I would have started seeing it right here. If I'd taken it and set it, there's still 50 pips left in it based on the 1 hour. Now, everything I've mentioned on these smaller time frames, you can apply to the 1 hour. Say you took the trade and you wanted to wait till this indicator crossed back below the 0 line. Well, that would have had you exit right over here. Or if you wanted the male and the filter to be the same color, it would have closed you out right there. And so you can pick all these different time frames and or setups. So it's great for long-term traders as well as short-term traders. Here's a little bit about the scanner. The scanner brings things to your attention, and then it can check pairs that you're not watching, so you can get a scan. And here's some of the settings that you can set. And here's what it looks like on the dashboard. When you look back, you can see when the charts or when the scans went off, which currency pair, whether it was long or short. And so that is really a great tool to help you find good trades. The course is only $399 with 1 month of the scanner subscription included. And that's a $100 value in itself. Starting with the second month, you only pay $100 a month for the scanner, which includes 6 hours a week of coaching. So that is really a fantastic coaching session. That's a great price because the scanner by itself costs $100, but you're getting coaching along with that. So if you have any questions, you can call or send an email to get more details on the automated stop because it's not available right now. Here are the links that you can get the copy of the Money Train course. And if you have any questions, you can email us at jed@forexstrategiesecrets.com or give us a phone call to get your questions answered.